Okay, just a quick reminder that Patreon is now finally charging on a pro rata basis, so you can feel free to sign up to the Green Star Trading Patreon any day of the month and no longer have to worry about that pesky double charge that could occur if you signed up late in the month and then got charged on the first day of the next one. No longer a problem. You sign up on a day, you're charged on that day each month going forward. So what kind of things can you expect? Well, why don't you come over and have a read of the tiers? There's a link in the description box below. But let's have a look at the most recent activity here on the Patreon. I recently introduced a new monthly video that we'll be doing covering macroeconomic fundamental data such as housing permit starts and sales, the Institute of Supply Management report on business for manufacturing and services, consumer surveys, CPI and employment data. So if this kind of thing interests you, there has been more interest in macroeconomic indicators lately. It's something I've been doing for many years in my own trading career. But we'd primarily focus on Elliott wave and the technicals, but if you are interested in this kind of thing, then it's just one more benefit to the Patreon of signing up. If you're not interested in this, there's still loads of stuff here for you to enjoy, such as the public Discord, the Elliott wave series, a bunch of other educational videos on trading, technical analysis, plus also the weekly live streams where you can basically request me to look at any asset you want to observe. So there you go guys, just a quick note, feel free to sign up, we'd be glad to have you, and now let's get back to the video. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for an update for Bitcoin. We're going to start on the BLX looking at the long term, then we're going to come into the Bitcoin chart and look at the smaller time frame, which admittedly I feel the price action at the moment is a little confusing. I've come up with a solution for the primary count at the moment, but honestly it's a bit of a mess. So we're just doing the best we can. The first point I want to make is I've had quite a few requests for this video update saying, oh well, price action broke down immediately after the release of your last video, Tom, so we needed an update straight away. You really didn't, because the primary count presented in that video was predicting that the market was about to break down, and that's exactly what it did. So whatever was predicted in terms of the forward move in that count is still in play, and you'll be glad to know that it exactly is the same today. It's the primary count is still the primary count today as it was 2 weeks ago, as it was 3.5, almost 4 months ago. So in that case, we're still expecting further downside. So we'll start by discussing that, and then we'll come in to talk about the smaller time frame. So, and a couple of alternate counts before we move on to the smaller time frame, I should say. So let's start with the primary count. Okay, so like I said, same old, same old. What we'll do is we'll just rearrange that slightly so that it's in a slightly better position. Same position, but just finishing at where the C is. And I'll bring the 2 up to meet it. So we're in primary 2 after 1, 2, 1, 2. This is still the primary count, and I'm going to be sticking with this unless I should say, it becomes untenable. I do have alternates to consider as well, and we'll talk about those a little later. So the primary count was calling for a wave 1 at minute degree into a wave 2, and that's where we had the wave 2 positioned, right? And right before, not long after I'd finished editing and uploading the previous week's video, I had that wave 2 there, and then we had this breakdown, and that caused a bit of a furore. But as I pointed out, that's exactly what this count was calling for the beginning of a wave 3, then 4, then 5, then C, then Y, then 2. And that is still what we're on track to do, I feel. Now, it may be a little further out in time, so it may be more something like this, 1, 2, 3, 4, 5 over here perhaps, rather than over here. I mean, that's not a predictor of time. I'm just leaving the labelling in a convenient place for myself. So we bring up our little target box, and what does this represent? Well, this represents a series of long-term confluences, which I have a great deal of confidence in providing support for future price. So the first one of those is the 61.8% retracement in log. This is the golden zone, and crypto does like its golden zone retracements. So that's at 10,277.82. That's our golden fib. We've got the 50 just below us here. I don't see any reason, other than it just being the 50 fib, for it to operate as support. We have no structural support here. We don't really have anything to go on, so I don't see the fib operating as strong support. It could, in an alternate scenario, potentially be the bottom of a 3-wave pivot before coming back up, before heading lower again. But I don't think it would be major support, so I'm not suspecting that scenario there to play out. I'm thinking bum 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 is more likely. Okay, so coming down to this 61.8% is where I expect to see it. If we remove that and we bring up our target fibs as well, these are based off of the WX pivot and the AB pivot within the Y, and they create a zone here between the two 100% extensions. These two 100% extensions, as you can see, are bang on sandwich the 61.8% extension, the golden zone we just spoke about, which also sandwiches the 89% linear retracement, 90% retracement for a deep wave 2. It's literally all in here, right? So it's all sitting in this area, and we're not done yet either, so let's move those out of the way. We've also got structural support levels, prior high, and then we've got a very strong level, prior high, prior lows, prior high, prior high, prior high, back tested lows. That's the strongest support level we got down, and it's bang in the target zone at 9953.51. It's basically 10 grand, isn't it? So that's sitting down there as well. If we then look at our volume profiling with our demand zone down here, we can see here's the thickest area of trading, here's the thickest area of trading in this prior impulse, here's our point of control, smack bang in all this demand zone here, right around our target box. So to throw it all on the chart, we've got our demand zone down here, we've got our support levels down here, we've got our fib targets down here, and we've got our golden zone down here, all waiting for us to get into this territory. I know it's a bit vague, because from a very low it's 8 grand all the way up to basically 12.5, so I know it's a pretty big area. I've tried to focus it down to between basically 10 and 12, taking a couple of grand off because I think it's more likely to come into that zone. But anywhere in here we've got so much confluence of technical factors waiting to catch the price down here, and that's why the primary is calling for this move into this area here. So that's the long-term picture, and that hasn't changed for a fair old while now. Ever since the old flat to this pivot here had broken down, and we were expecting the 1, 2, 3, 4, 5 back here. Once we broke this pivot, this is when the WXYXZ count began, and as you can see, that was all the way back in June. So I actually do myself a dirty there. It's more like 5 months that we've been considering this. So it's still on course. 1 and 2 is complete. This could be a really messy diagonal into a 1 and 2, or it could be how I've labelled it. That's up for debate. Yeah, so that's basically the long-term picture. So that's the primary count. So now let's have a look at a couple of alternates on the long term. Right, so let's remove these out of the way. And we'll put that back into the primary as we rearranged it. There we go. So the oldest count we've got, I mentioned the flat here a moment ago. Well, what if we just extended the flat and made it more extreme in its target? Well, that is still a possibility, but it's getting very, very close now to being wiped out. The invalidation for this old count is 13.831.41, and we're getting awfully close. So, if this count breaks down, we can just delete it out of hand because it's no longer applicable. A, B, C into A, B, C into B, 1, 2, 3, 4, 5 into C has to come in prior to 13.831.41, as it cannot invalidate the wave 1 of the same wave degree. Okay, so that's easy enough. If that gets taken out, we can get rid of it. Now there is a new alternate version of this flat count which I'm considering, because we discussed this recently on the live stream with our members on the Patreon and on the Discord. So we're looking at what if it is still the flat pattern, and I brought this up in the last time I looked at Bitcoin for our members, and instead of topping here into this WXY, we still keep this flat pattern, okay, but we can allow it to go deeper because we complete the prior wave degree 1 into 2 3 into 4 into 5. We complete it here at the top. Now, let's be honest, we don't like the relationship between this small and brief wave 4 and this long wave 2. It's ugly, it's not pleasant at all. It's much better to go 1, 2, 3, 4 and 5, right? No, that's why this is not the primary, this is why this is just a very loose interpretation of a possible alternate. But I have seen very brief wave 4s in crypto, very, very brief wave 4s in crypto. Sometimes, as I've seen them in the commodity markets as well, and I become more convinced over time that some of the specific wave behavior of cryptos is more in line with commodities than it is with equities. Now, I'm not sure exactly why that is, probably just a random thing, but brief wave 4s can occur, but we don't give it a very high weighting of probability because of the bad because of the bad relationship between the two. It doesn't have the right look, let's put it like that. So this gives us the possibility of the same free wave move into an A, which is the flat itself into an A, zigzag into a B, and then 5 down in a C. Now this can breach this wave 1 high because this is a larger wave degree completion into primary 2, and this is A, B and C into 2. So it's basically the exact same count as we first considered all those months ago back in September, October 21, except we've now changed the wave degree by adjusting the intermediate wave into this high here, so we can call it a larger primary degree flat. The only thing I do find a little compelling is that look where the 2618 target for the wave C comes to. Should we just have a look again? Target fibs, target box, golden ratio, support levels, demand. The 2618 sits bang smack in the middle of everything. Absolutely everything. So sheer coincidence? Probably, knowing crypto. But you know, go put your tinfoil hat on and you come to terms with it however you can. I think it's probably just coincidence, but either way, it makes an extreme extension for a C possible. Now you might say, oh, that looks extremely long, that's in log, what's it in linear? Well, in linear, it's much closer to the 1618. Okay, see, here's the 1618 now. 2618 would be well below 0, of course, adjusting to linear. So, although the C seems long, it's not as long as you think when you look at it in linear scale. It just looks huge in log scale. So it's just something to consider. So there's a new alternate to consider. And then we had the old alternate, which was the flat here, which gets invalidated to 13831. So there you go. That's the long-term view on the BLX as I see it currently. Things are exactly the same as they have been for months. We've got our wave 2 complete at minute degree. We're expecting a further 3, 4 and 5 down in the C, and we're expecting to come down into all of the prior mentioned support and find something down here to turn the market around. And yeah, that's basically it. So now that we've done that, let's come in and have a look at the smaller time frame picture and see what we can see. Actually no, sorry, before I do that, I just want to be clear that the alternates I've discussed here, I've shown you today, are not the only ones I have in my mind or the only ones I'm considering. There are multiple ideas being thrown around our Discord group at the minute. Some I'm going to probably go through in the next live stream later this week. So if you do have suggestions potentially for a WXYXZ, believe me, it's already being considered and we are looking into it, but I'm not in a position to present that today. I'm going to stick with what I've got until I think I've got something better. So just to clarify that. So let's move over and look at the smaller time frame now. Okay, so we're basically going to be looking at the small time frame inside this box here. Right, this is the best I can make of the situation at the moment. I'm not suggesting it's the only explanation. It's just the best I can do within the primary count currently. So I'm just going to tidy things up a little bit so you're not quite so blind by what's going on. So we had our WXY double zigzag into our wave B of our larger intermediate wave Y into our primary 2 From there we led down with a minute wave 1. We got a rather funky running flat into a 2, but legit. We got an expansive B and a C which finished before the A, so a running flat. We got 5 wave subdivision in the C. Okay. Now you could argue, like I mentioned earlier, that you've got a leading diag here, in which case you could label this one and you'd have to try and jig this as a zigzag, or a double zigzag perhaps, into a 2. So that is an alternate way of counting it. It's kind of irrelevant, as it brings us to the same point, which is a 2. So however you get here, doesn't really matter. If you're saying this is 2, we're in agreement. Now from there, we have the FTX fallout, and the chart is unsurprisingly volatile and messy, with wicks all over the place during this extremely volatile move, and we have to just accept that. That's all we can live with. So we can come down to the 30 minute, I think, and we're going to look in line at this moment just to try and get better sense of it. Okay, so we have the wick for the 3 comes down to here, and the wick for the 2 comes up to here. So that's what we're using as the price extremes to actually measure where price went, and this gives us a legitimate 3, which is slightly longer than the 1. So if I just show you, it goes past the 1618 target, the 3. It doesn't look like it does because it's literally just a straight line. And you say, well, that 3 looks too short, but it's actually more than 161% the length of the 1. 3 into 4, then we actually get something resembling 5 down into 1. From here, the best thing I've been able to pull out of this to get a completed wave 2 at minuet degree is a sideways combination with a triangle in the Y wave. Now you might say you can't have a triangle in a wave 2, Tom, and you're absolutely right. A wave 2 cannot be a triangle, but a triangle can occur within a sideways combination within a wave 2 because it's a subwave, not the whole wave itself. That's what we're dealing with here, and believe me, it's a fucking mess. So I'm just doing the best I can with it. Now, any alternate count which involves a triangle here, I'm just going to say this quickly as a caveat. Anything which leads with a 5 down into a triangle is saying this is a B wave in a zigzag, and that changes the overall count from breaking that previous low back in, where was it, all the way back in June, wasn't it? Yeah, so but if we come down here in 3, breaking that June low instead of 5, then we're looking at a continuation of a larger combination of zigzags, WXY, WXYXZ. That's the other alternate that I'm considering at the moment, but it's not fleshed out enough to really present yet. So this is what we've got in the meantime. On the longer term, the primary is still ticking lower and seems to make sense. On the shorter term here, we're having to bully it a little bit, but it's still legal. So what have I done? I've gone sub-micro A, B, C into micro W. That's a zigzag. That's the first part of our combination. That's the W. We've gone A, B, C sub-micro flat into micro W. Excuse me, actually, I just realised I got the wave degree incorrect here. That's sub-minuet. So that, excuse me, that should be micro. Let's start again, shall we? A, B, C micro into sub-minuet W. A, B, C sub-micro into micro W for another combination, into micro X into sub-micro A, B, C for a zigzag, into micro Y into sub-minuet X. So W zigzag, X combo wave, and then we've got, because X can be any corrective structure, and then we've got A, B, C, D, E into Y, so micro triangle into sub-minuet Y into minuet 2 for a sideways combination, which it's got to be one of the rarer ones, to be absolutely honest, by a log degree. It does represent a poor substitute for what we'd expect to see in a wave 2 traditionally, which is more of a sharp correction and simplistic, but given the market psychology currently post FTX and all the fallout of it, total fucking confusion seems to make sense in its own way. So justify it however you like. That's my excuse for it at the moment. From here, We're waiting for a larger, I think a larger one of a smaller degree to complete. It may be done and expanding into 1 2 1 2, so it could be 1 2, and then that would be sub minuet, and there would be one. Sorry, excuse me. Tell you what, I'll just use the drawing tool instead. I'm more likely to cause harm that way. So 1 2 sub minuet, 1 2 at micro, 3 4 at micro, 5 into 3 sub minuet, 3 sub minuet, 4 5, so on and so forth, and working our way down. It's a little early days to really pluck it out at the moment. So that's my best explanation for the short term count. Okay, as you may have just noticed, there's a little bit more price data on the chart here, and you might be thinking, well, what's going on? Well, this is a new part of the video that I literally edited and added in late because I wanted to wait before publishing this to YouTube, because I have an awful habit of publishing something and then price action coming along and completely shaking things up and everybody going, oh my god, what's happening now, Tom? So I figured I'd wait a few hours because I had a strong suspicion that this 1 into 2 with a WXY with a triangle in the Y as a sideways combination was dodgy. I said it's very rare and very ugly and a bit weird. So I figured I'd wait a few hours in case something happened. And something has happened now. Just to be clear, this is still possible. And this level here at the wave 2 at the termination of the E has not yet broken. So this could be a 1 into 2 before rolling over. So this count is still possible. But I wanted to wait a few hours before putting this out on YouTube. Just in case what I suspected could happen happened. Now it hasn't happened as in it's confirmed yet, but it is now more of a possibility. So let's have a look at what I'm talking about. What are you talking about, Tom? Well, it's the exact same structure except it's not complete yet. Instead of it being a free wave move, a free wave move like this, okay, it's actually a free wave move like this, and the triangle is another subwave as part of a larger B wave. B waves are notoriously tricky. So we come down here in the same combination for the W, we then get the triangle in the X, and then we get a zigzag into a Y, and now we will come out of here in 5 to get the C of an A, B, C flat into the 2. And then we'll head lower. So I hope that makes sense. Like I said, I'm sorry to break the tradition of putting out a piece of information and then by the time you get it, price action having broken down, and that doesn't always invalidate what I've said, but it often shakes people up and they're not quite sure what's happening. So this time I figured I'd hang in there, wait a little bit longer and see what happened, because I had a strong suspicion this might be the case. So take out that level that I just spoke about, that invalidation level, and then this is more likely the count on the smaller time frame. Everything I've said on the longer time frame still remains totally valid. So please consider this an addition to the video going forward into the next section, as the next section was recorded prior to this price data. Okay, so let's just add in that little price label there. 16799 to the tick I make it. If that breaks down, then the idea of this, the prime rate being correct, this is wrong on the smaller time frame. This is not a sideways combination into a 2, but instead this flat pattern is likely the one playing out instead, and we've had this really tricky convoluted wave B. It could have been a zigzag if we hadn't made a new low. This could have been 5 3 5, but a B can never come back beyond where the A began unless it's in an expanding flat. So that's what we've had to go with here. So just keep your eyes open for that if we break this level. Now if we roll over from here, it could still be 2 was here, and this is 1 2 of a smaller degree. So there you go. Sometimes worth the wait. Let's get back to the video from earlier. So I think we should wrap things up with a bit of classical analysis, see what our indicators are doing, our moving averages are doing, and see if there's any signs of our target low coming to fruition. Okay, so here we are back on the BLX, and we've already done some classical analysis with support and resistance, demand zones, fib retracements, fib extensions, all that. But we're just going to wrap up now by having a quick look at the indicators on the daily and weekly time frame, quick look at our moving averages, and a quick look at the volume. So one thing of note here is the increase in volume we've had with this breakdown after the FTX debacle, right? It's higher than the volume we had back in June and May of this year. And if this is 1 into 2, volume increasing as we enter the 3 is to be expected. We may yet see another spike in volume if we come into the 3 of the 3, if that's 1 and 2, if you see what I'm saying, and the 3 to come. Although just coming into the wave 3 here, if there's no extension within it, that could be sufficient to announce the arrival of the wave 3 on its own. So that was supported also by push down into oversold conditions, deeply oversold conditions here on the RSI, which we can see the oversold condition was stronger than the wave 1, than when we came down in the bottom of the wave 1 back here. Okay, where we actually got a bit of divergence signalling that rally. So the wave 3 in both volume and aggressiveness momentum is stronger than the initial wave 1 move down, so that kind of that supports the idea. Now on the longer term time frame, however, we have some divergence between the closes, bear with me, just drawing on the chart again for a laugh, between the close at the June candles and the current low. You can see we've got this bullish divergence here. Now it has broken the trend of low to low, but it is still slightly higher. Now I don't think that's going to hold. I think that we're probably going to get a bigger oversold condition again as we break down and extend. And if we do get an extended 3, it will probably be more aggressive. But we can see that overall on the MACD we are significantly higher with the low here than we have the lows back here, even though we've set lower lows in price. The OBV still shows a clear downward trend, bearish volume just continuing to accumulate over time. You can draw this line pretty much any way you want, but you will simply find a downward trend. So we're looking to see over the long term a low to come in the next few months, maybe post Christmas would be my guess, and then for this downward trend of negative volume to break and a positive shift in momentum, preferably on the back of some strong divergence near the lows. Not present on the weekly on the daily time frame yet, as I feel there's still too much structure to come in to complete this move down. But if we come across to the weekly time frame, let's just take these off for a moment, and then look at this. We've still got that big spike in the volume on the weekly. And if we look at our divergences here on the weekly time frame, we can see that since the oversold condition back in June, from the close of that candle to our present price, we have pretty strong divergence here, and we also do on the MACD, and we actually have more of a bullish accumulation of volume on the OBV. So maybe that's divergence too, especially between these recent lows. Alright, so there is signs that we're heading towards a new definitive sustainable low, but this is all just divergence between previous lows and current price. It is not officially divergence yet, as we don't know we've set a new low. All of it could easily unravel in the next few weeks, come down into more oversold conditions, roll over in the MACD, roll over in the OBV. But even if we do, and we still get some kind of divergence between those lows, you don't know where we're going to end up, that could still signal some kind of longer term bullish divergence, but we're just going to have to wait and see for that. So one thing to mention before we go then is invalidation for this primary count as it stands currently. Do I have a invalidation point for us? I don't think I do. So if this is A and this is B, if this is 1 and this is 2, then this here, top of the 2, 21465 spot 22, that's your invalidation point. If we come back above this, we're doing something else. Okay, we're doing something different. We've got to come back and reconsider how we're moving down. It could have been possible, but this was the bottom if we do that. We'll have to try and figure out how. This would probably be some kind of ABC into some sort of larger combination zigzag. Alright, but we don't have to cross that bridge or think about that unless this gets invalidated. So let's put one other point in. Here's the wave 1 invalidation. So depending on whether this was a leading diagonal and this was a 1 into a 2, and whether this is now a 1 into a deeper 2, that's a problem for us. The biggest invalidator, the strongest invalidation point is this one here. But temporarily, we have to remember, if we are into a wave 3, wherever it completes, whenever it completes, the 4, let's say we get 1, 2, 3, 4, 5 into a 3, the 4 can't come back above here, which is the wave 1 of the same degree. So we've got 2 invalidation points to consider as price action develops over the coming weeks. And let's just make sure this is accurate. 21,465.22, 21,465 spot 22, and this one as well, 18,208.01 spot 01. Okay, so yeah. That's it, guys. That's all I've got for you this week. I hope it's been helpful. Like I said, we're still on track. The primary count is still the primary. We're still heading down into all of that support, all of that confluence, and that's where I'm expecting the market to bottom. If, for whatever reason, we come out of here and invalidate this level, then it's time to reconsider what we're looking at, and we'll have to come up with a solution. But we'll be on guard for that as price develops over the next weeks, over the coming weeks. Alright then, guys, thank you very much for joining me on this technical analysis of Bitcoin. I hope it's been useful to you. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is massively appreciated. If you're interested in joining the Patreon, there's a link in the description box. Click on it, head over, have a read of the tiers, and feel free to sign up anytime you like, as Patreon is finally charging on a pro rata basis. And if you're not following me on Twitter yet, there's a link to my Twitter feed in the description box below as well. Alright guys, take care of yourselves, all the best, and I'll be back with you soon. Bye bye.